Hello. Hello, everyone. We are about to start. Feel free to come and sit. I will quickly introduce myself. My name is Edouard Bitton. I'm a partner from PwC. I'm the head of strategy for France and Maghreb. Our strategy department is called Strategy End. Very happy to be here with Anne and Clément for this interesting talk. We are going to talk about the technology market today. It is at a turning point. It faced restructuring over the last months. 2023 was a strange year in a way, with the first part of the year where you had a recorded volume of deals, and the second part of the year where we faced an important drop in terms of M&A volume. So we had a kind of uncertainty due to inflation, due to the geopolitical context and to the regulation requirements. Now it's 2024. There's room for optimism. We have advance in AI, of course. We have more certainty around interest rate, and therefore we have some questions we would like to explore with you today. First is, how is the technology market? So how we characterize the market? Are we still in a bearish market or not? And given current trends, how do we need to adapt our strategy when we are an investor or a CEO? So very happy to have this discussion today with Anne Osdoa. So Anne is a partner of Sofinova and also the CEO of Moods Surgical. And Clément, who is the president of IAD. So may I ask you to present yourself and maybe ask you a first question. So how do you characterize the current tech market? And do you think if it's still bearish?
Yes. Hi, Edouard. Hi, everyone. And thank you for the invitation to be here today. So my name is Anne. I'm a partner at Sofinova Partners, which is probably the oldest venture capitalist in Europe. Sofinova has been around for 53 years. And invests now only in life sciences. We used to do IT, but we stopped doing that. And I'm specifically in charge of a fund that focuses on medical devices, so medical instrumentation. I'm also the CEO of one of our portfolio companies, which is called Moods Surgical, in the field of surgical robotics. And it's a company that just entered the French Tech 120 this week.
Congratulations for that.
And is on the verge of, or beginning basically commercial launch both in Europe and in the US. And to answer your question, sorry, and this might be more of a sectoral thought, but we have seen signs of optimism early this year. There's a big healthcare conference called the JP Morgan Healthcare Conference in January in San Francisco, where it seemed M&A activity was resuming and people were highly optimistic. However, it's not fully reflected in terms of fundraising and investments. For now. So I think the key word here is really uncertainty, right? There's a lot of people just, waiting to see what's going to happen through the end of 2024. And, the true rebound is expected early 2025, as far as we're concerned.
Yes. So I'm Clément Delpirou. I'm the president of IAD. IAD is a PropTech unicorn, proud member of the Next 40. We're a tech-enabled real estate business in which we replace the old-fashioned real estate agency by tech tools. And the company is 20,000 agents strong in 8 countries. and it was established quite recently, 16 years ago only. So has experienced a lot of growth due to both the real estate sector growth and the tech enthusiasm that was so strong during especially 2020 to 2022. Of course, both markets and sectors have reversed their movement since now 18 months, and especially in our prop tech business, I would say that there's been a very rapid and even brutal switch from top-line growth-based investments and tech to profitable tech, which means that there are no deals anymore for unprofitable companies, which of course slow down, even froze a lot of projects and activities. But we still see some two things. First, great deals for profitable company on one hand, and also well-funded businesses that needed a couple of months to switch from a top-line state of mind to an EBITDA state of mind, that are on the verge of being profitable again. And then I think that, yeah, end of 24, start of 25, we should see more activity and more optimism.
Thanks all for this first view. Uncertainty, volatility. What has this situation changed in your day-to-day business, and how have you adapted your strategy to face this uncertainty?
Yeah, happy to start. So, you know, the main tool we've been using for you know a couple of years now is bridging, right? We've had many companies. I mean, probably every single company in our portfolio need to fundraise over the past 2 years, and given the context, it was not necessarily a good thing to go out for a priced round, right? So, and to bring in new investors. So, you know, we just have to be resilient, right? And resilience means, you know, taking the risk to bridge these companies until they achieve more significant milestones and are in a better position to go out and fundraise, which might mean bridging the company once or twice or even 3 times. But for us, as long as the fundamentals were right, as long as our investment thesis was not proven wrong, there was really no reason not to do so. So we've been doing a lot of bridges. We have also been instructing all CEOs, and you know, I'm part of them, to constantly fundraise. You know, in the past there used to be cycles, right? You would go out and fundraise for 6 months and then get it done and have money in the bank and rest for a year or a year and a half and then go at it again. That's not the case anymore. People just constantly fundraise, and when you find money, you just take all the money you can. You know, I think there's a lot more pragmatism in a way, and it's just become a routine exercise to, you know, pitch and try to convince investors every single week, basically. So that is definitely a new trend. And then the last thing we've encouraged is, you know, changes in business models, right? Diversification. Shifting from sometimes something that is perceived as a pure medical device business to a data-driven or data platform type of business. There are a few examples in our field. You know, one of them is a very large company called ResMed, which does respirators for sleep apnea. And you know, over the last 2 years, they've completely developed a data platform that serves patients, providers, payers, and have started monetizing it, and you know, it has been an incredible driver for the rest of their business. So I think this is, you know, the type of behavior that we try to develop as much as we can.
Thanks. And maybe a question on, you know, you mentioned that now it's constant growth of money. Does that generate any additional responsibility or pressure on CEOs or not?
Well, I think CEOs have clearly been under stress, you know, over the past, you know, 12, 18 months. You know, they know they're backed by Sophie Nova in our case, so you know there are worse places to be. But yes, for sure, you know, you need to be able to fundraise, and you need to, I mean, hopefully enjoy it to some degree. Otherwise, your daily life is becoming pretty miserable. Yeah.
Thanks. Clément, on your side, how did you adapt to current situation, especially in your market, which was brutally impacted by the crisis?
Yeah, I mean, the big difference between 2 years ago and today is that 2 years ago we had time and money to think about today, tomorrow, and the day after tomorrow. And right now, we're luckily profitable enough to be able not only to focus on today, but only tomorrow. And we cut everything that was related to the day after tomorrow and prospective things in order to resist to this big shift. It's reflected into a variety of decisions. The first one was, of course, sometimes team size adaptation, mostly downwards, but not all the time, because some functions were critical in a bearish market. Second, in the tech field, systematically revisit every big feature in a make or buy grid without any orthodoxical view on make everything or buy everything, but what's the right way to do it. And it led us to re-internalize some specific tech features or externalize some others. And maybe the last thing that also changed is the way we look at KPIs. Because as you said, if you just look to your performance in absolute terms in this kind of market, you don't want to get out of your bed. I mean, red numbers every day is quite depressing. So we reintroduced more strongly relative KPIs rather than absolute KPIs. So let's say in France, which is our biggest market, our North Star is not number of transactions anymore, but market share nationwide, which progressed constantly even during the bearish market. And as long as we're able to go north on this kind of KPI, I think we can be proud of what we do, and our investors too.
Thanks, Clément. One question for you, because addressing, you know, cost structure issue could be complex in an industry where technology and expertise is, I would say, rare on the market. So, how have you addressed potential talent shortage, or how, in a way, you need to downsize your team, but in another way, you need to maybe to get on board new capabilities? How did you manage that?
We try to preserve as much as possible the talent pool in the tech field in the company. For us, it's all in tech is probably 200 people, 200 FTEs, and as I said, we had to cut the pure R&D thing, and that was not an easy decision, but that was the one had to be taken. And on the other hand, it was not that difficult, because I remember 21, where hiring a developer was like fighting in a jungle, and so wages are not as crazy as they were. You don't have to introduce bizarre perks anymore in the company to be attractive. So so by keeping on to this, I think the external pressure was lower, so it was easier for us to retain the team.
Thanks. And one question for you. We saw that the M&A market has some kind of rebound recently with enterprise value that are probably lower than last year. So have you experienced any M&A opportunity more reasonable now than 22 or 23, where the enterprise value was really high? Or finally, is it the same than previous year in terms of opportunity?
Yeah, so there's been a correction in valuations, for sure. But what we're seeing is that there are still deals. They tend to be large. They tend to be actually super large. So fewer deals, but very strategic for the acquirers and willing to pay the right price. And in terms of the financing environment, as you were saying, Clément, there probably fewer financings, but the companies that have the right fundamentals, the companies that have been investing in innovation, in their talents, in growing their business, and really in growing it as a standalone company as opposed to kind of window dressing it to get acquired. Those companies are still raising decent rounds at decent valuations. It's a little bit about doubling down on winners, if you will, and less about statistics, right? So fewer deals, but better quality and still decent exit numbers or valuations.
And probably better price at the end. Thanks a lot. Coming to one important point regarding this industry, of course, we are seeing every day the development of AI, of Gen AI. What is your view of the impact of Gen AI or AI on the resilience of this market? Do you think it will bring value and robustness to the market, or are we still in a situation where volatility and uncertainty will remain?
There's a lot of hype, no doubt, and I think there's a lot of wait and see. There's definitely a premium given to companies that can adopt these technologies and develop real use cases. But that's the point, right? Developing real use cases, whether it is internally for streamlining activities or for productizing it and monetizing it ultimately. And this takes time, right? From the technology break to the concrete application and demonstrating its value. It's a little bit early to tell. But what's sure is that it is giving many companies a chance to enrich their offer or pivot or show something different and new. And so a lot of CEOs and their teams are embarking on that effort.
Thanks, Anne. On your side, Clément, impact of Gen AI on your business?
I would say two kinds of impact. The first one is led by us, by HQ. So we deploy new tech features based on AI and on a really daily basis. We have, for example, AI-based algorithm that's going to generate the text of a real estate listing on Se Loger or Le Bon Coin in France without any errors and very SEO friendly. And given that we have more than 1 million listings per year, it's of course, in terms of productivity for the agents, a great plus and some time that is saved that they can reuse to do more value-added things like convincing clients to get mandates. So productivity and also quality control for us, because since we're able via AI to ensure a great level of quality for all our text and also all our pictures, and we're talking about millions of pictures, it's definitely something that we wouldn't have been able to deploy with human resources. It would have been 10 times too expensive. And on the other hand, we have very interesting and sometimes funny initiatives from individual agents and that are the most advanced in the way they can prompt the AI to use it in a deeper way. And one example I have in mind is a guy south of France that before every meeting with a seller asks ChatGPT to prepare the kind of objection he's going to have during the meeting and prompting the psychological profile of the sellers and the main pain points he expects to have. And then he uses the AI as a personal trainer for this. Of course, you need to be quite advanced in the way you use AI to do that, but these kind of interesting use cases are starting to emerge.
Very interesting, Clément. Is it something you would like to deploy around the group now?
Why not?
Okay. Thanks a lot for that. So I think we are still at the beginning of this Gen AI journey. But to your point of view, is there any need to adjust your strategy due to this, due to Gen AI, due to new technologies that may disrupt market, or even generate new opportunity or risk for your business? So, any change in your strategy? Clément, you would like to start?
I mean, yeah, for us in the tech-enabled real estate business, it's more tactical. It's closely related to cost and quality control. So it enables us to travel even lighter that we were doing before, and then making the business model even more robust. But I don't see, and we don't see, maybe you're not creative enough, any major strategic shift in this kind of business due to AI.
And on your side?
Yeah, I think in our field, the jury is still out in terms of how it's going to impact healthcare and the way health is provided. But there are some, initial, opportunities that we're seeing, in drug discovery being one of them. Also, the fact that any medical device going forward is going to be connected and communicating. And so this is something that we're definitely following closely. Moon Surgical was, I think, the first French company to get an investment from NVIDIA, and they're one of our lead investors and very supportive for that particular reason, right? We have one of their edge computers in our robot, and it does on the fly advanced feature, while the surgeons are performing surgery, right? So definitely a number of new embarked usage in healthcare that we can anticipate, and where investments are going to be more important.
And are you going to grant additional investment to your portfolio companies in that space, in the Gen AI space?
I think we're going to foster adoption of these technologies by our portfolio companies, and then in our new investments, it will be a filter for sure.
Thanks. Thanks a lot. Maybe one last question for you both. We mentioned uncertainty. We mentioned volatility. We know that there's a kind of question mark on 2024. But given ongoing development around innovation, Gen AI, new technologies, connected device, etc., are you optimist for the upcoming months, year, and are you going to accelerate your investment in technology?
Always. No, I think I'm an optimist by nature, but no, I think there are reasons to be optimistic, right? As we said, in just a few months, we should be seeing clear skies. And I'm in a field where more and more people die on this planet every day, and they'd rather not. So there's always going to be a place for more tech-enabled healthcare.
And on our side, I would first say that even the current environment is already full of opportunities. We mentioned easier retention for talent within the company. You mentioned, and that's true, and easier and cheaper M&A of less flattering profitability-wise companies. And my view on this is we're in an industry, PropTech, that had to shift from growth to profitability. You cannot do that in 3 months. It's been an ongoing process during, I would say, the last 18 months, and I see more and more companies that are on the verge of being profitable. And I think that once this shift has been done, some of them will have disappeared, but most of them will have survived and reach profitability, and that's going to be the right moment to reaccelerate and reinvest.
Thanks, Clément. Thanks a lot to you both. Turning to the team. I don't know if there's any question for Clément, and I have so many questions for you guys. Question? So I have one. if I may. We'll ask first to Clément. Do you see a difference between the French market and other markets in terms of investment, in terms of innovation, or in terms of trends, business trends?
Strangely enough, France is almost PropTech's paradise. I mean, there's no other country in which as many initiatives, as many great companies have been created, except maybe the US. So for this, it's a real chance for us to be based in France. To give an example, what I would call next-gen players, so tech-enabled companies, have reached a 27% market share in the French real estate market. It's 1% in Italy, it's 0.5% in Germany, and 15 in Portugal, to quote some of our neighbors. And to have on our around our board table investors both from France and from the US, my second answer would be size. Like when you start to envision what we did 6 months ago to launch in a market like the US, it's 17 times bigger. So the kind of numbers, the kind of investment, the kind of plans you have to draw are a bit really different, and it's another thing you have to adapt to.
Interesting, thanks. And on your side, any specificity to mention?
So, you know, I think in terms of the rebound that we were mentioning, right? There is, you know, probably a more clear-cut perspective in the U.S. in the sense that there's been a lot fewer, you know, public policies and things in place, you know, put by governments to soften basically the crisis. You know, things like PGE, that doesn't exist in the U.S., right? So the rebound might be a little bit clearer and cleaner in the sense that, as Clément was saying, the ones who don't survive, and then the others, you know, benefit from, you know, investments and momentum. You know, we, at least at Sofinnova, have a mandate to, you know, only invest in companies that are global in the way they approach their market, or to make sure they are in their early stages of life. So it is to some degree maybe you know, clearer trend in the US than in Europe, where there's like a few months shift and delay in, you know, how these trends are materializing.
Thanks. Any question? Any further question? No? So maybe a last one on my side, if I can. How do you explain that, Anne? You know, we have a trend. The US is always really pushy. As you said, Clément, it's not the same size. It's a market where, you know, it's quite easy to invest and take risks. How do you explain that it's probably not the same dynamic in Europe? Or do you see some I would say some willingness in Europe to be more aggressive in terms of investment? We heard Mr. Macron, President Macron, on Monday saying that he's going to raise another fund around Gen AI. So there's probably good trends, but how do you explain that we are not at the same level in the US? In terms of dynamic, at least.
For me, you have two factors. The first one is the size of the domestic market, which of course generates from day one in any company a lot of ambition. And the second one is probably cultural, because it can sound like obvious, but when you meet people in our field, I mean, every CEO's goal is global domination. So, and I think probably most of the time, European entrepreneurs or companies or investors are sometimes a bit shyer than US people, for the best and the worst.
Agree with that. Thanks a lot to you both. It was a pleasure to have this talk with you. Thanks a lot.
Thanks, Edouard.